There was no lucky stock pick, no massive inheritance. I didn't flip real estate or strike it rich with crypto. I just did one painfully simple thing. I bought one ETF once a month, every single month, for 10 years. That's it. And that's how I built a $350,000 portfolio, starting with no special knowledge, no connections, and no huge income. In this video, I'm going to break down exactly how I did it, what I bought, why it worked, and how you can copy the same exact system using almost no time or effort, even if you're starting from scratch. We hear all the time that to build wealth, you've got to hustle hard, take big risks, or find some hidden gem in the stock market. But what if that's all wrong? What if success in investing isn't about finding the next big thing, but about understanding one single truth? Consistency beats complexity. Over and over again, the world tells you to chase big returns, fast gains, excitement. But excitement doesn't build wealth. Boring habits do. I'm not exaggerating. You don't need to predict the market. In fact, I didn't even try. I didn't time anything. I didn't panic in market crashes. I just committed to one thing, letting compound interest work for me every single month without failure. 10 years ago, I was making around $48,000 a year. I had no investing background and barely any savings. Then I read something that hit me like a freight train. Every dollar you save is an employee. Your job is to hire as many as possible. That changed everything. I went from thinking about money as something to spend to thinking about it as a tool to earn my freedom. I started investing on the first of every month, without fail. Some months were just $500. Others were $900 or $1,200. There was no magic number. Only one rule. Buy something that would build wealth, one share at a time. I started with one single fund, VTI, the Vanguard Total Stock Market ETF. It owns over 4,000 publicly traded U.S. companies in one fund. Companies like Apple, Amazon, Home Depot, Procter & Gamble, and thousands of others. It's diversified. It has ridiculously low fees, just 0.03%. That's $3 annually for every $10,000 you invest. And historically, it's delivered 7 to 10% yearly returns over the long term. That's enough to double your money every 7 to 10 years. The best part? I didn't have to think. No stock picking. No guesswork. I could focus on increasing my income and automating my system and let the market do the rest. Most people focus on doing what's smart, but long-term investing isn't about being smart. It's about staying in the game. That's the real edge. I didn't skip months. I didn't stop when the market got ugly. I kept buying, even when it hurt. Let me show you the actual numbers. Let's say you're investing $1,000 every single month into the market using something like VTI. With an average 8% return, here's how your money grows. After year one, you've put $12,000 into the market, and it's worth a little over $12,500. Not life-changing yet. After year 5, you've invested $60,000. Now it's worth $73,000 to $75,000. Still not flashy, but stay with me. After year 10, you've invested $120,000 of your own money. At 8% growth and dividend reinvested along the way, that account is likely worth around $180,000 to $200,000. Now here's how mine hit $350,000. Whenever I had extra money, tax refund, bonus, side income, anything, I dumped it into my portfolio. I didn't raise my lifestyle. I raised my contributions. That small difference? It shaved years off my road to financial independence. But here's the part no one tells you about compounding. It feels slow for years. The first $1,000? Boring. The next $10,000? Still boring. But at year 4, year 5, year 6, the curve starts to bend. You're not just earning returns on your money, you're earning returns on your returns. It's the wealth snowball. And once it picks up speed, stopping it is nearly impossible. The biggest reason I never fell off track? I automated everything. My paycheck hit. Money moved into a brokerage account. On the first of every month, it automatically bought shares of VTI. I didn't even log in half the time. It was like setting up a wealth-building robot. I removed emotion from the process. And that is where most people fail. They let feelings steer their finances. But I built guardrails. I also tracked one metric religiously: dividends. Not net worth. Not account value. Just dividend income. For me, Seeing my quarterly income rise from $50 to $500 to over $400 per month today, that's what kept me going. It made the gains feel real. And yes, of course I lived through market crashes. 2020, 2022, I saw my portfolio drop 20, even 30%. And it sucked, but I stuck to the playbook. Every drop became a buying opportunity. The market goes on sale, and I'm scooping up shares cheaper than ever. No panic, just more shares, and more dividends next quarter. That resilience is what separates investors who succeed from those who quit just before the magic begins. As time went on and my portfolio grew, I adjusted my strategy slightly. I added a dividend growth ETF to the mix called SCHD, the Schwab US Dividend Equity ETF. It pays around a 3.5% yield and has grown its dividend like clockwork. So now, my setup is about 70% growth, VTI, 30% dividend income, SCHD. That combo gives me long-term upside and cash flow. I earn over $400 per month in dividends now, automatically. That pays for my groceries, or my rent, or my car insurance. And I never needed to touch the principal. That's power. Let's zoom out. Why does this work better than the traditional retirement model? Because unlike a 401k that locks your money up until you're 59 and a half, building your own brokerage portfolio creates flexibility. You can access it anytime. You can coast, slow down, pivot careers, take a sabbatical, even semi-retire, without waiting for permission. You don't need to build a $2 million account to live well. You just need a system that grows and pays you, quietly, predictably, and forever. Along the way, I made sure to avoid 3 massive mistakes that derail most investors. First, chasing hype. I didn't dump money into meme stocks, AMC, Dogecoin, or tech moonshots. I stayed boring and diversified. Second, spending dividends. In the early years, reinvestment makes all the difference. Spending dividends too early ruins the compounding curve. Third, trying to time the market. I never tried to wait for a better entry. I picked a date, day 1 of the month, and stuck with it. Price didn't matter. The habit did. If I started today and wanted to copy the exact setup, here's what I'd do. 1. Open a brokerage account with Vanguard, Schwab, Fidelity, doesn't matter. 2. Link your bank and enable recurring transfers. 3. Pick 1 or 2 ETFs. You can go with VTI for total U.S. market coverage, SCHD for dividend growth, or VOO if you prefer just the S&P 500. 4. Automate monthly purchases. Set and forget. Even $100 a month is a start. The dollar amount matters less than the behavior behind it. You win by never stopping. If you're still watching, here's the exact playbook I followed. Year 1 to 3. Automate your monthly contributions, reinvest every dividend, and absolutely ignore portfolio swings. Year 4 to 7. Increase your monthly amount as your income grows. Bonuses, raises, side hustles. Year 8 to 10. Add tactical reinvestment. Start choosing when to deploy dividends during pullbacks. Begin visualizing your freedom fund hitting real-life milestones. This covers rent. This covers my car. Or this replaces half my salary. Remember, the first 2 to 3 years feel slow. That's where most investors give up. Don't. The breakthrough lies just beyond the boredom. That's when the wealth flywheel starts spinning on its own. You don't need to monitor the news. You don't need to pick the perfect security. You just need a machine that runs, and time to let it do its job. So here's my challenge to you. Open a brokerage account this week. Fund it, no matter how small. Automate your first monthly investment. Just one. Do it today, not next month, not next year. Today. Your future self will thank you in 10 years when your $50 investment becomes $200,000 in freedom assets. The sooner you start, the faster the wheel begins turning. Simple scales, boring works, and freedom compounds. Like this video if it helped you. Subscribe for more no-nonsense investing advice. And check the description. I've added a free 10-year investment tracker and ETF comparison guide that I personally use. You don't need a finance degree. You don't need luck. You just need a strategy and the discipline to stick to it once a month. Let's build the machine.